Shares of GE, they're down more than 7% after the company announced it will cut its dividend in half for the first time since the financial crisis. Reports say the new CEO, John Flannery, is moving to streamline the company by putting more focus on its core businesses. Let's go straight to Deirdre Bolton, who's live in New York City with more on all of that. Hi, Deirdre.
Hi, Trish. So that was very much the message. You talked about simplicity. That is what the relatively new CEO of GE, John Flannery, spoke about all this morning to investors. So he took over from Jeff Immelt, rather, in August of this year, and he doesn't have that much time to put this turnaround plan in place. There are investors and analysts who have outright called Trish for a breakup. So as far as the plan that was outlined today, I think in his way, this was the idea to preemptively answer some of those concerns. So some of the changes that GE is making as of now, they are cutting the members of the board. So that is to say, instead of 18 directors, there will now be 12. Again, this idea is to streamline and simplify. For all senior management, the way they are going to get paid changes. So the idea here is accountability. So all senior executives, instead of having 50% of a cash salary, 50% of stock, they're actually going to be paid, Trish, 80% in stock. So it is a results-oriented kind of structure. The CEO himself, John Flannery, going to take 100% of his compensation in stock. Again, this message coming forward where he has said really that complexity has hurt this business. And it's really one of the toughest moments, I would say, in its 125-year history. You were talking with Lori Rothman about that dividend cut. It is only the third time in this company's history that it has had to do that. So a lot of investors here were pretty edgy, no other word for it. In fact, Trish, the CEO even took a question, why should anybody buy your stock right now? He pointed to the three areas where they're really focused, and that is in healthcare and in aviation and also in power. And he was saying, listen, this is a bet on these core franchises. We know we are competitive in these areas, and we can continue to execute in those ways. So some changes coming. They did allude to job cuts. They did not actually give any details as to in which divisions, the amount, or anything like that. But they have made it clear, the CEO and the CFO, who also spoke on the record, that these changes are just going to be coming over the next 12 to 18 months. And again, 2018, they are labeling as a reset year. Trish, back to you.
All right. Thanks, Deirdre.